This is David Patrick, Fitzstock Charts market video update for March 27, 2019. We are in a 4-day downtrend. We've been looking at the Golden Cross. We've been looking at the market pulling back to test the Golden Cross, just like 1998. We've talked about our #1 goal is preservation of capital and gains during downtrends and no trends. We've been well prepared for the market conditions. We're going to look at the new website. We're going to look at the 90% Club. Currently, we have 126 stocks that have engaged on the year from our focus list. 9 losing positions. I believe we have 9 stocks they haven't paid, unable to scale, still waiting whether they're going to get stopped or paid, which leaves us with 85% winners, which is unheard of in the industry. We've batted 750 since we launched the service, and I'm going to strive to meet those numbers going forward. But right now, we're overachieving with 85% win and our 90% club going through the roof. And we'll look at that in a moment here. 90% club, 80 doublers. 80 of them are up 90% or more, some 2, 3, 4, 500%. 80 in 2019. We make our money in uptrends. We've pounded the table on that. We had a 40-day uptrend. We had a 10-day uptrend. You should be high stacked with profits. We know what to do in downtrends and no trends. We know what to do. We have 29 triplers. 1,022 options have doubled since we launched the service. Unheard of. 288 triplers. We even hit it out of the park with bonds recently. TLT. Options up 126%. Crazy, crazy returns. We have updated the website. It's got a new design. Right now, it's got a little bit of lag to it. I'm going to try to improve with the lag because it's got high def 4K pictures. So it's lagging a little bit. I'm looking into multiple different ways to increase my speed with that. So hopefully the speed will increase with that. Bear with me. But yeah, it's more user friendly. It's got the same stuff on here. You know, if you're looking for the old bull that is no longer on the homepage, well, the subscribers can see obviously our old bull with the Samurai Slayer when they click on subscribers. You can see already we got like a 7-second lag. We're trying to get down to 2-3 seconds, which is what the old website was. So you just got to bear with the lag. But you got subscribers, you got your performance, your consultations, everything above. You got your charts. So just bear with the lag. I appreciate your patience. Okay, so let's get to the market and what's going on with the market. We know we're in a downtrend. We know we look very similar. 1998 over here on the left. 2019 over here on the right. We saw a Golden Cross 50 moving average to the 200. We saw the Golden Cross 50 through the 200. Similar, not identical. We held the 5200. Are we going to hold the 5200 today? I don't know. I don't know. But quite simple. It's real simple math. If you just wait for us to close above the 10 simple moving average, you take all the risk out of the equation for new swing longs. All you have to do is wait for rules to engagement to make money. Average traders lose money in no trends and downtrends. Don't be average. Be smart. You don't have to be smarter than the market. All you have to do is ride the trend of the market. We're currently in a downtrend. And we've been all over this. So we're in a no excuse atmosphere. If you're underperforming in the market the last 4 or 5 days, all you had to do is pull back the throttle, scale some positions, reduce the risk as soon as we break the 10 SMA. Let's get to a couple things here. Let's get to the daily SPX. So we always look at the higher time frame, which we will again. But this is a daily going back to right here. When I went all in back in 16, stayed leveraged long the whole way up, and then I went cash. Just breaking trend lines using rules of engagement. So I went 45%, 80%, 120%. It was leveraged long a few times up through here through this 40-day uptrend. I even was leveraged long during this period of time. And then I reduced risk. That's how I trade, right? Our weekly, we have conflicting indicators here because our weekly, when I flip it to the weekly, our weekly is still bullish where the daily, the shorter term daily is bearish because we're in a downtrend. So we're above the 10 SMA. We're above our Golden Cross here, 10 through the 50, which is the mini Golden Cross on the weekly. So everything looks fine when you look at the higher time frame, which is why I remain bullish, even in this downtrend. The question is, are we going to touch down here? And I don't know. When you don't know, you don't have the odds in your favor. We talked about this before. If I sent you to Vegas with a $10,000 check, I said, go gamble it. And I told you, MGM was 60-40 odds. Caesars Palace, 70-30 odds. Wynn Casino, 90-10 odds. Which casino are you going to? Because the Wynn. You're going to win in the Wynn with uptrends. Why are you trading the downtrends or no trends? Just, that's the time to relax and enjoy all the profits you made. I'm telling you from past mistakes I made early in my career, you don't need to trade the downtrends. So just sit back. Wait for the uptrends to happen. You're going to get paid again. We normally get 2 to 3 good uptrends a year. We had 11 uptrends last year. We've had 2 already this year and 1 huge one. You should be high stacked with profits, preserving them, and waiting for your rules of engagement. Now, what do I think is going to happen? Well, I do think, I don't know if we're going here or not, but I do think we are going to get back above the 10 SMA, and I think we're going to 2,900. That's what I think is going to happen. What am I going to do about it? Well, I'm going to stay 35% long market exposure with spider calls just in case. And if we do close back above Tuesday's highs, I'm going to probably put more on. I'll probably put some QQQ calls on to get 100% long market exposure again in the next uptrend. That's how I trade. So if you're a swing trader, trade the uptrends, trade the ESFL. If you're an aggressive trader, you can take the ESFL all you want, anytime you want. You can take shorts, longs, you can day trade, but realize that the odds are in your favor in uptrends with the ESFL, even with day trades. Right now, if you're day trading, guess what? The shorts are paying more than the longs. Why is that? Well, first of all, we saw an MA top yesterday, point that out. Why is that? We're in a daily downtrend, right? So the shorts paid huge yesterday with the MA topping pattern. The shorts paid again today. And now obviously you have a long setting up. You got a break of a downtrend here. The only problem is these lows came with MACD at new lows. So that's going to create some more volatility. And probably the bears are going to be selling back up here. But it doesn't matter. Right now, if you're long from the last ROE long, from the break of this simple downtrend line, you're long versus your stop. You've already scaled, right? I will tell you this. I'm 35% long market exposure. I was up to 120 during the uptrends. I'm going to be, again, over 100% long market exposure once we get over Tuesday's highs. That's you already know my game plan before it even happens, all right? Let's get into, by the way, I'm going to try to get the audio even better. I bought a new microphone. Who knows how it turns out today? If not, I'll re-record next Wednesday. I've already recorded this one 2 or 3 times, very frustrated. I'm going to figure it out. But once I get the audio down, I'm going to re-record all the videos in the website under subscribers, and everything will be crystal clear and very organized. I'm going to try. I'm looking to improve everything with the service, with the website, to the speed of the website, to the videos, to everything. All right, but getting back to trading, which is the most important thing. Where are we right now? 4-day downtrend. We're going to wait for rules of engagement. We got the Golden Cross happening soon. I do think that's going to be a catalyst for price between now and let's call it Tuesday, Wednesday. Doesn't matter what I think, only matters what the market does. Be patient, wait for your rules of engagement. NASDAQ, same thing. Looked like it wanted to close right at no trend, starting to see some weakness, came back. MACD's sloppy. What happens when MACD's sloppy? You don't get paid. You don't get paid on swing long positions in the short term. Oil futures, doing nothing, sideways grind, 200 SMA, seems to have it contained. XLE doing nothing. There's really not much momentum anywhere, and we'll get to tech in a moment. XLF is in that giant megaphone wedge pattern. That's our least favorite pattern to trade. We just went from our favorite pattern to trade earlier in the year, break of a downtrend line, bull flag, to now we got megaphones, we got sloppy, we got sideways MACD. You have to know when to trade, and I tell you when to trade. Trade the uptrends, trade the bull flags. We're not in one right now. Preserve capital. That preserve capital doesn't mean we're going lower. It means we're sloppy. IYT is interesting. IWM is interesting. Very. When we get to this IYT, actually, nice reversal. It's actually looking strong on a weak day. And I tell you what, we do need a sector to lead on the way back up. So maybe it's oil and maybe it is transports. I don't know. We'll have to wait and see. IBB, it's in a, just like we drew with the financials. You have this wedge pattern, and it just wants to go to the top and bottom of the wedges and just fool everybody. That's not a bull flag. That's not price momentum. That's not price strength confirmation. It's sloppiness, and we stay away from sloppiness. UDOW, it's a wedging pattern. It's holding right above that golden cross. Once again, I think higher prices, I think we hold. Doesn't matter what we think, only matters what price tells us. Gold, wedging. You know, some interesting gold plays. Newmont Mining looks interesting, so does Royal Gold. I don't think it's a great momentum play here. What I do think was a great momentum play is what I said and what I put on the ESFL, which is TLT bonds. They're paying huge. They're up almost 130% on those options that engaged, and we're getting paid. And hopefully you've scaled, you put your stop at your entry. I said many, many, many times over the last couple of weeks, the bonds are a great investment and a great trade. Apple, very interesting. MACD's slowing down, price is slowing down. We got paid on Apple already. We've got paid twice, maybe 2-3 times in the year. We pressed. It is what it is. We're going to wait for it to reset up. We're not going to just pick bottoms with Apple right now. Amazon reversing nicely. It is a leader. We're going to watch for it. Netflix rolling over but holding the 50 SMA. Tesla all over the map. It is reversing today. Booking. I'm going to fly through some of these because I don't see a trading edge right now. Google breaking down but starting to come back on the day. AMD. Texas Instruments. No. OLED. No. I think Avgo does look pretty good. Still bull flagging. That one looks pretty good. We talked about Xilinx here. Once it broke above this downtrend line, it bull flagged above. We said it was going to go new highs without MACD and then come back down. That's exactly what Xilinx did. And we got paid fat on Xilinx a few weeks back. So we're going to look for new stocks setting up. Microsoft is a leader, slowing down. Oracle is a leader, slowing down. Adobe slowing down. Coop holding that 50 SMA, trying to at least now. Some of these early in their day looked really bad. They're starting to make a comeback off the lows. Jobs, CRM. That's a breakdown, CRM. That's a double top, too. So we have to see that's a big leader. Roku, Twitter, Team. Yeah, Team's breaking down. That's a big leader. So we've lost a lot of high-flying leaders. Let's look and see. China is doing really nothing in TES. I don't see too much there. Box, shop. Yeah. So normally through these videos, we either see a great short or a great long, and we're really not seeing too much of anything. In my opinion, it more looks like a no trend than a downtrend because we're not seeing any price weakness confirmation. We're just seeing sideways MACD, sideways price, and as soon as stocks hit support, they bounce. And as soon as they hit resistance, they go right back down. JP Morgan, bear flag, head, maybe left shoulder, maybe right shoulder. Time will tell with that one. That is a bear flag below the 10 SMA. It does not look good in the short term, along with a lot of these banks. Every time they've looked bad in the past, they go right back up. Very difficult to short. 2008 was one of my best years trading. It was easy as anything to short the banks. All they did is short squeeze, go lower. Short squeeze, go lower. Short squeeze, go lower for 18 months. So if this ends up being the top of banks, let me tell you, it'll be a long way back down. It'll be easier to short these things. You just have to be patient and wait. I personally don't think that's going to happen, but I never thought it was going to happen in 07, 08 until we saw it happening. And then you traded what you saw. You didn't trade what you see. I mean, what you thought. I'm all over the place there. Sorry about that. BLK, nothing. PayPal, grinding really nowhere. Let's look at the oils, COP. And they're just, look at the momentum. You got flat MACD. You have to trade oils and financials when they have some kind of momentum, and they just have none. They have nothing. They're grinding, and moving averages are, some of them are sandwiched between moving averages, which is just creating even more, MGM looks horrible, by the way, more conflicting price patterns. And so with that said, we already talked about the market's sloppy right here. Let's flip the biotech, Amgen, Gilead. Do you see a trading edge on any of these? Because I don't. Alexion looks okay. And you know, you can sound it, you can sense the, with just my tone of my voice, when I'm excited about the market and when I'm not. And today, I'm not. It's not like I'm bearish. It's more or less, there's nothing going on besides intraday day trading. And that's not for everyone. I know that. And so I know most people like to swing trade. For swing trading, the 40-day uptrend we already had and the 10-day uptrend we already had is when you get paid. Right now, and by the way, CMG you did get paid on. That was a long today. I think Starbucks engaged did not pay. I don't think we had enough to scale on that one. But yeah, so Twillo, let's see what Twillo's doing. That's breaking down. That's a big leader. So I just really flew through almost all the stocks that we follow here. I wanted to make this video sort of brief because really there's not much to do. When I say there's not much to do, I'm talking about swing trading. You already know all my positions. I post them on Twitter. I put them on the daily updates. You know all my long market exposure. Many times I give you my trades before they even happen. I tell you I'm going to do XYZ if it gets up to XYZ. The same thing with the spiders and the QQQ. If we see price back above Tuesdays, which was yesterday's high, I'm adding. Right now I have very minimal long market exposure at 35, and I have very great cost bases on a QQQ and Apple. And let's look at the Qs. Yeah, I mean, I'm in at a decent price, so I'm high stacked with profits. All I'm risking right now is profits. I don't want to risk principal until what? I like to change these to bars, by the way, because I can see them much clearer. I know a lot of you love candles. I'm not a big candle lover. Rates, simple high. What's the high? 20. Let's call it 28.30. So let's make things real simple here. Above 28.30 gets me even more bullish than I am. And you know I'm bullish because of the weekly and because of our historical chart pattern comparison. Where do I become bearish? I already drew that line. That's our line in the sand right there, right? That's 27.22. So 27.22 gets me all cash, and above Tuesday's highs, I start adding to some of my winning trades. So that was 28.30, above 28.30. So in here, and you already know what I'm going to say before I say it, I'm going to draw a box. Well, some of you know what I'm going to say, hopefully all. What is this box called? No man's land. No man's land. Because that's where you give back your year-to-date gains and your profits, trying to trade no man's land. How can you have conviction in here? You have no idea where this market's going. Up here, we have an edge, leaning towards new highs. Down here, the market looks bearish or at best sloppy, and you don't have a trading edge. You go to cash. In here is no man's land. So I'm 35% long market exposure. If we do see price strength confirmation, I'll exercise those spider calls next week, become 85% long market exposures, and I'll probably add to my Qs to get over 100%. That's if we get above Tuesday's highs. If we don't, you already know where my stop is. All right? So we know the weekly is bullish. We know the daily is bearish. We know your 5-minute intraday trades, you're going to see 2 longs, 2 shorts almost every single day. Just take your trades, scale them. Some work better than others. The rules of engagement work. The rules of engagement work best in uptrends and staying long in uptrends and adding on price strength confirmation after you scale. That's how the methodology works. That's all I have for you on the market video update. Have a great trading day.